Many, of course, look at the interest rate complex and point to it and say, this is the reason stocks have gotten so volatile. Well, I understand the notion that rising rates is going to potentially take a bite out of stocks unless the stock market pays attention to a stronger economy, which then comes in and sweeps rates higher and equity values higher. That's the way the Fed would like it to work. That's the way the investors would like it to work. But I really think that rates have gotten a bit of a bum rap, and I'll show you why. This is a year-to-date chart of 10-year note yields. We began this year and ended last year at 341. So let's consider, I always talk about markets going guns hot. That means they're in new territory. So when we start the year, we start guns hot. And what's interesting is that for the start of the year, we basically went straight away from 241 to 295, up 54 basis points. Then, of course, for February, we started to consolidate, even traded below 280 for a while. But then we went guns hot back in May again, as we took out 295 and we continued up. So guns hot up to 311, which was in May, and that was the high yield of the year. But that just added 16 basis points on. Then we go through another, as we did in the beginning of the year, a huge period of consolidation until we come up to that final point where we started to trade higher. And this was early October. From October 2nd to October 3rd, we moved 12 basis points and ended up taking out 311. Okay? And we ended up with a 323 high for the year. So add on another 12 basis points. But the point of what I'm trying to say is that if these black lines are guns hot, it seems hard for me to consider that if equities were getting nervous about the breadth or the speed of interest rates, they would have gotten a whole lot more nervous. Well, you might say they did. We had all that volatility in February, don't you remember? I do. Just like now, except for smaller moves, we had the volatility surge again. And for good reason. Volatility in treasuries remains quite low, but volatility in equities is quite high, and when it goes up, equity positions come off. The long and the short of it is, it's a cumulative increase in rates with the notion of a Fed making them go farther than they are now. But on any given day, market really doesn't have to complain. It should have done that at the beginning of the year.